Welcome to channel. Today we will explore the vast landscape of finance in a way that feels like a flowing river of ideas without the usual barriers of punctuation. The journey will be long and detailed, so settle in as we move through concepts that shape the way individuals, communities and nations manage resources and wealth. Finance begins with the simple act of managing resources, whether those resources are coins in a pocket or digital balances in a ledger. The essence of finance is about choices. Every choice has consequences, and those consequences ripple outward into the future. When someone decides to save, they are essentially choosing to delay consumption in order to prepare for opportunities or challenges that may arise later. Savings can take many forms, from keeping physical currency in a safe place to allocating digital balances into structured plans. The discipline of saving is often the first step toward financial stability because it builds resilience against uncertainty when unexpected expenses appear. Those who have saved are better positioned to respond without falling into hardship. Another dimension of finance is budgeting. Budgeting is the art of planning how resources will be used over a period of time. It requires awareness of income streams and expenditure patterns. A well-designed budget is like a map guiding a traveler through unfamiliar terrain. Without a map, the traveler may wander aimlessly, but with a map they can reach their destination more efficiently. Budgeting helps individuals and organizations align their spending with their goals. Investment is another pillar of finance. Though we avoid certain terms here, we can still discuss the idea of putting resources into ventures that are expected to grow over time. Investment is about trust and vision. Trust in the system or project and vision that the future will bring returns greater than the initial commitment. People invest in education, skills and businesses because they believe these will yield benefits in the long run. Risk management is central to finance. Every decision carries risk, and the ability to measure and mitigate risk determines success. Insurance is one tool that spreads risk across many participants so that no single person bears the full burden when misfortune strikes. Diversification is another method. By spreading resources across different areas, one reduces the impact of failure in any single area. Finance also involves the flow of resources across borders. International finance connects nations through trade and cooperation. When one country exports goods and another imports them, financial systems facilitate the exchange, ensuring that value is recognized and balanced across regions. This interconnectedness means that local decisions can have global consequences and global events can influence local realities. Personal finance is the practice of applying these principles at the individual level. It includes saving, budgeting, investing, and managing risk, but it also involves psychological factors like discipline, patience, and foresight. Many people struggle not because they lack knowledge, but because they find it difficult to resist immediate gratification. Financial literacy programs aim to bridge this gap by teaching practical skills and encouraging healthy habits. Corporate finance operates at the organizational level, where decisions about resource allocation can determine the survival or growth of a company. Leaders must decide how to fund projects, how to manage costs, and how to balance short-term needs with long-term ambitions. Transparency and accountability are crucial because stakeholders rely on accurate information to evaluate performance. Public finance deals with governments and communities. It involves collecting resources through taxation and distributing them to fund infrastructure, education, healthcare, and social programs. The challenge in public finance is balancing fairness, efficiency, and sustainability. Governments must ensure that resources are collected equitably and spent wisely while maintaining trust among citizens. Technology has transformed finance. Digital platforms allow instant transactions across continents. Mobile applications provide tools for budgeting and saving. Artificial intelligence helps analyze patterns and predict outcomes. Blockchain technology introduces new ways of recording and verifying transactions. These innovations increase efficiency, but they also introduce new risks such as cybersecurity threats and regulatory challenges. Ethics in finance is another important topic. Decisions about resources affect lives and communities. Unethical practices can lead to exploitation, inequality, and instability. Therefore, integrity, transparency, and responsibility are essential values. Finance is not just about numbers, it is about people and the impact those numbers have on their well-being. Education plays a vital role in shaping financial behavior. When children learn about saving and budgeting early, they grow into adults who are better prepared to manage resources. Schools and communities that emphasize financial literacy create generations capable of navigating complex economic landscapes without falling into cycles of debt or dependency. Sustainability is increasingly important in finance as societies recognize the need to balance economic growth with environmental protection. Sustainable finance encourages investment in projects that promote renewable energy conservation and social equity. This approach ensures that future generations inherit a world where resources are not depleted but preserved. Behavioral finance studies how psychology influences financial decisions. People are not always rational. They may act on emotion, fear, or overconfidence. Understanding these tendencies helps design systems that guide individuals toward better outcomes. For example, automatic savings plans take advantage of inertia by making saving the default option rather than requiring active effort. Globalization has expanded the scope of finance, connecting markets and cultures while creating opportunities and challenges. Resources flow more freely across borders, but this also means that crises can spread quickly. Cooperation among nations becomes essential to maintain stability and foster growth. In conclusion, finance is a vast and dynamic field encompassing personal choices, corporate strategies, public policies, and international relations. It is about managing resources, making decisions, and preparing for the future. While numbers and systems provide structure, the heart of finance lies in human behavior, values, and aspirations. By understanding and applying financial principles, individuals and societies can build resilience, pursue opportunities, and create a more equitable and sustainable